So it's time to rejoice. No, I'm not talking about Christmas. We've had revisions to the third quarter gross domestic product. I know, stay with me, it does get more interesting. It's come in at 3.6%, which is meant to be a great place for it to be, to show that the economy is growing wonderfully. But Martin, down from our Poughkeepsie office today, you don't think this is anywhere near as good as it looks. Tell us why.
No, well, 1.7 percentage points of its inventory, so that's almost half.
So all just companies building up stock and not actually selling anything. And
well, that's right. And, you know, $115 billion of extra inventory's got to go somewhere.
Yeah.
So that suggests fourth quarter numbers going to be lousy.
Right.
And then even the stuff that isn't industry is only boring real estate. I mean, housing's up 13%, non-residential structures are up 14 or thereabouts.
But then again, I mean, housing's a good thing to focus on there, isn't it? I mean, there's still this pent-up demand, economists will tell us, and the rate of home sales being produced is still 30% or so below the long-term average. So this gives room for hope for some people, surely. That,
well, on the other hand, there's pent-up supply from all the oversupply we had in 2004 to 2007. And, of course, you've got to look at what's causing it. I mean, the very low interest rates. So, of course, everybody goes out and gets a mortgage if they can.
If they can. Of course, that's part of the Fed's idea, I think, at least implicitly in all this, is that with low rates and lots of money sloshing around, you get low mortgage rates, people buy houses, housing market goes up. Eventually, you get some kind of wealth effect, and people start spending money, and it does convert into a more sustainable GDP growth picture eventually, which may not be this quarter, but eventually. I mean, is that realistic?
Well, yes. I mean, what goes up must come down. The stock market's up 27% this year. That's obviously a wealth effect too. And while obviously places like Nevada, where housing dropped by 50% and it's recovered a bit, yes, that's a genuine wealth effect. It's genuinely good for Nevada's GDP. But stocks up 27%, I mean, maybe they'll go on going up forever, but I suspect that wealth effect is temporary. One of the problems with inventory as well is that in order for the inventory number to be even zero next quarter, they have to put on another $115 billion of inventory next quarter. So if business just stops increasing inventory and just holds it flat, then in fact that gives you a huge negative number in next quarter's GDP.
Right. I think there's a few economists out there who'll probably agree that, you know, a very good third quarter isn't going to mean a very good fourth quarter for sure. In fact, it's probably front-loading things that will then come out.
But that's just quarter on quarter. What about next year? What do we need? I mean, one thing that people have been saying in the past few weeks, some of these roundups have gone to, is look at what's happened in Washington, all the lack of agreement within Congress. As one guy said to me, it shaved 1.5 to 2 percentage points off GDP this year. That may be crazy as a number. But
it's hard to quantify. I mean, it's certainly a factor. Is all this uncertainty, the budget kind of stumbling from one crisis to the next. But I mean, something slightly more tangible is jobs. We have the big jobs report coming out, monthly jobs report coming out tomorrow, Friday morning. We've had some good sort of interim. The ADP is sort of foreshadows that a little bit, and then jobless claims today foreshadows that a little bit.
I mean, these are decent
those
numbers,
have been better
but not
numbers.
Great numbers.
But more jobs, more employment means more spending as well. But no, they're not great, and they're not, you know, yet great enough for the Fed to be able to sort of confidently say, right, you know, we can take lots of this stimulus off the table. So we still don't know what they're going to do next month, for sure.
Okay. Well, Martin, thanks for coming down for that. Richard, thanks as well. And we'll be back with more Breaking Views tomorrow.